Hi guys, welcome back to my channel. My name is Shriyari. As tomorrow is Union Budget and everyone would be curious what would Nirmala Sitharaman ma'am would announce about the budget and how would the budget affect the Indian stock market. So in this video, I am going to explain how would the budget affect the Indian stock market and how does it impact and what are the expectations of the budget. So make sure you watch till the end. First of all, let us understand what is Union Budget. Union Budget is a yearly financial plan of the government which shows how much money it has been earned and how much money it is going to spend in the coming years. It includes spending on infrastructures, education, healthcare, and also tax changes. That is why the Union Budget is very important in the Indian stock market because government spending directly affects the companies and sectors. There are mainly three types of budget. Number one, balanced budget. Balanced budget means where the government's revenue and expenditure are equal. Number two, surplus budget. Surplus budget means where the government's revenue is more than its expenditure. Number three, deficit budget. Deficit budget means where the government expenditure is more than its revenue. Now let's talk about which sectors are affected by the union budget. Every year, the government focuses on some sectors which are very important. Number one, infrastructures and capital goods. If government spends higher on infrastructures and capital goods, that boosts revenue to the infrastructures company. If the government reduces their spending on infrastructures or government spending gets delayed, this may face pressure to infrastructures company. Examples includes roads, railways, bridges, airport, and etc. etc. Number two, banking and financial sector. If the government focuses on supporting credit and lowering non-performing assets will boost banking profitability. If the government provides stricter regulations or higher taxes on the banking system, which leads to pressure to the banking stocks. Number three, defense sector. If the government focuses on defense sectors, especially towards domestic manufacturing defense companies, then this will lead to better performance and higher profitability and long-term visibility. If the government focuses on imports instead of Indian companies, then this leads to short-term pressure on the defense stocks and reduced growth expectations. Number four, manufacturing and MSME sector. If the government focuses on supporting MSMEs and manufacturing sectors like providing incentives or providing subsidies, increasing tax benefits can lead to better performance of an MSME sectors, whereas reduced incentives, removal of subsidies, or higher cost compliance can hurt MSME sectors. Number 5. Green energy and EV sectors. If the government pushes the renewable energy and EV sector support, then this leads to better performance of green energy and EV sectors. If reduced subsidies or policies, strict regulations in EV sector companies can lead to slow performance of these sectors. Number 6. FMCG sectors. If the government focuses on improving FMCG sectors like lowering taxes and higher income in the hands of the consumer, which ultimately leads to better performance and demand of FMCG sectors. If higher taxes or increasing GST can lead to slow performance of these FMCG sectors. If the budget is tough towards the income tax, like increase in income taxes can lead to lower performance in the economy, like reduction in consumption, reduction in investments, and reduced spending on goods and services. Now let's talk about income tax and how does budget affects income tax. Income tax is a tax we pay on our earnings. If the budget is good, that is positive, like reduction in income taxes or exemption to income taxes, which can lead to better performance like higher spending on the goods and services because you get more money in your hands. Higher spending on goods and services, increased consumptions, increased investments. So, income tax affects all individuals who earn above taxable limit, not just high income earners. Now let's talk about capital gain tax. This is very important for anyone who invests in stocks, mutual funds, and properties. In simple words, when you sell an asset and makes profit, that profit is called as capital gain and government charges tax on it. This is called as capital gain tax. There are mainly two types of capital gain taxes. Number one, short term capital gain. Short term capital gain means when you buy an asset and sell it within a year, and the profit you make on it is called as short-term capital gain. Usually it is 20% on stocks according to Oldslab. Number two is long-term capital gains. That is holding an asset for more than a year and selling it after 12 months, and the profit you make on it is called as long-term capital gain. Usually it is 12.5% on stocks according to Oldslabs. If the budget is friendly, like reduction in capital gain taxes, which increases investors to invest more in the stock market and mutual funds. If the budget is unfriendly, like increase in capital gain taxes, which can lead to investors to sell less or delayed investments. So capital gain taxes affects only investors, not everyone, like income tax. Now let us talk about how corporate tax is affected by the union budget. Corporate tax is a tax companies pays on their profit. So any changes in the corporate tax directly affects the company earnings and stock prices. If the budget is supportive, like government reducing corporate taxes and providing incentives, then the companies are left over with profits. If the budget is strict, like increasing corporate taxes, then the companies are left with pressure. So this can affect share prices. Corporate taxes are mainly affected by investors and companies and not on every individuals. Corporate tax changes plays a major role in deciding market directions. Now let us talk about how GST and other indirect taxes are affected by the union budget. These are the taxes we pay on goods and services, so they affect everyone directly. If the budget is supportive, like reduced GST rates, then the prices of the goods and services goes down, and this ultimately increases consumer spending. If the budget is strict, like increased GST rates, which can ultimately leads to reduced consumer demand and negatively affect consumption based sectors. GST and indirect taxes affects all the consumers, not just investors and companies. So GST plays a major role in overall growth of the economy, like inflation, demand, etc. etc. So by this we conclude. We have discussed how the union budget overall performance, how it affects the economy and stock market. On the budget day, it's very important to understand the announcement clearly instead of reacting towards market volatility emotionally. I will see you again after the budget, where we will break down the actual announcement and market reactions. So if you found this video is useful, so please like, share, subscribe. Thanks for watching.